The Precious Metals Week in Review, July 17th, 2015. Brought to you by Precious Metals International. Volatility continued this week. Stock markets across the globe seemed to take the news that Greece had accepted the latest reforms proposals and been essentially forced to take yet another bailout from the troika as fantastic news this week, despite the fact that the latest so-called solution for Greece simply pushes the current problems further down the road, yet again, for the debt-laden country. The number of Americans filing initial claims for state unemployment assistance plunged by 15,000 claims last week, dropping back to 281,000, reversing last week's gains. The previous week's data was also revised lower by an additional 1,000 claims. The seasonal adjustments typically employed in the calculations during the summer may be skewing the data. However, many automakers tend to shut down their plants during the summer for retooling, and the calculations for seasonally adjusting the data take this trend into account, despite the fact that some automakers have chosen to keep production levels through the summer in recent years. China's official economic growth for the second quarter beat expectations, coming in at 7% from a year earlier. The beat, rather than making analysts jubilant, triggered further doubt in the calculation methods for the official data. Adam Myers, senior market strategist at Credit Agricole, told CNBC, "You only have to look at commodity prices to see that there's a disconnect with what the official Chinese data is showing and what really the demand in the underlying economy is having for things like raw materials. We've been talking about that for months, and still the Chinese data remains relatively solid. But all the underlying anecdotal evidence points to a much deeper slowdown in China. Put on top of that the wealth and credit effects that we've seen through the Chinese stock markets in the last couple of weeks. A much larger deterioration appears to be on the cards than the official data would indicate." The Bank of Japan, BOJ, cut its economic growth forecast but maintained that it would still reach its inflation target by April of 2016, and chose to keep its stimulus program at current levels. The central bank appears to be expecting a pickup in consumer spending that would boost consumer prices and help it reach the inflation target of 2%. BOJ Governor Haruhiko Kuroda said, "Export and output growth have moderated somewhat, but we expect this to be temporary. But as for the outlook, exports are expected to increase moderately, albeit with some fluctuations, due to improvements in overseas economies and the boost from a weak yen." In Greece this week, Parliament voted on whether to pass the latest set of reforms which Athens submitted to the troika of international lenders last week, after months of stalemate in negotiations. Protesters outside Parliament hurled flaming Molotov cocktails at police dressed in riot gear as the voting got underway. Greek Parliament voted to approve the reform measures 229 to 64 votes, with 6 abstaining. Over half of the no votes against the reforms were from Prime Minister Tsipras' own Syriza party, and losing the support of those members could mean that the Prime Minister might be forced to make changes to his current government. If Mr. Tsipras fails to maintain a grip on his power, it could mean yet another set of snap elections in Greece by September or October, which could once again throw the entire reforms for bailout cash scenario into turmoil within the debt-laden country. Following the Greek Parliament's approval of the latest reforms package, European Central Bank ECB President Mario Draghi announced at his usual monthly press conference on Thursday that the ECB would be increasing its Emergency Liquidity Assistance (ELA) to Greek banks, saying, "We have today accommodated the Bank of Greece request, though scaled to 1 week. We want to see how the situation will evolve." Greek banks have been essentially closed for over 2 weeks. Reuters reported that many of them would reopen on Monday since the ELA program was raised, but as of the time of this writing, third-party verification of that report could not be made. In addition to the increase in the ELA program, the Eurogroup area finance ministers also appear to have approved a 7 billion euro bridge loan to Athens to provide liquidity, while negotiations for yet another Greek bailout begin. Surprisingly, the German parliament, which has been the most outspoken against the bailout proceedings in Greece since it has contributed the most money for the previous programs, approved starting new negotiations for another 86 billion euro bailout program for Greece by a margin of 439 to 119. German Chancellor Angela Merkel urged her lawmakers to vote yes on backing the negotiations, calling the alternative, letting Greece simply default on its debts, chaos. Brent crude oil fell to the mid-$50 a barrel range this week as a deal was finally reached in the negotiations with Iran. The deal on Iran's nuclear ambitions is widely expected to cause additional oil supply to come online, as Iran's own crude supplies are finally allowed to reach the wider market. The continued glut in global oil supplies may lead to heavier downward pressure on the near-term price of crude, which will put continued pressure on heavily oil-dependent economies such as those of Russia and Venezuela. The euro started the week under continued pressure due to the evolving situation in Greece. The battered currency trended downward all week and appears set to close the week lower against the US dollar. As the euro continues lower, analysts are once again beginning to discuss the possibility that the battered currency could reach parity with the US dollar. The Japanese yen started the week spiking higher against the US dollar, but quickly retraced the gains and began trending downward, appearing to finally find a bottom early Friday morning. The Japanese yen also appears that it will finish the week lower against the US dollar. Volatility should be expected to continue. Markets seem to completely ignore the protests, some of which turned violent and destructive, around the Greek parliament vote to approve the latest reforms package, which the Greek government apparently hopes will unlock further bailout funding for the heavily indebted nation. The fact that Prime Minister Tsipras had to sacrifice much of the support of his own Syriza party in order to get those reforms passed through parliament appears to have been lost on the media and stock investors alike. The last time the Greek government bowed to demands for further austerity reforms, the incumbent government fell apart, resulting in snap elections that led to the current party surging into power under promises to reverse the austerity measures the Greek people have been suffering under for years. A similar situation seems to be highly likely again if Mr. Tsipras cannot successfully restructure his government to remain in power long enough to see the reforms through to implementation. Some analysts are predicting that Greece may see another series of snap elections as early as September, which would likely throw any bailout funding negotiations into massive disarray once more. Adding to the woes of the Greek people this week, a series of wildfires broke out in the outlying areas around Athens on Friday, forcing evacuations of many areas as fire crews fought to contain the blazes. Greek officials believe that the blazes were likely deliberately set, possibly in retaliation for the yes vote in Parliament on the reforms. As American news outlets trumpeted the solution that was reached for Greece this week, two Senate Democrats warned on Wednesday that if Congress does not give Puerto Rico, which is a U.S. territory, the power to restructure its $73 billion worth of debt, then a massive humanitarian crisis could erupt on the island nation. Senator Chuck Schumer said, "The fact of the matter is the $73 billion in debt that Puerto Rico can't resolve could lead to a humanitarian crisis unlike any Puerto Rico has ever seen. We're talking about the potential loss of critical public services, schools shutting their doors, ultimately the shutting down of government across the island." Mr. Schumer said that the solution would be to give Puerto Rican municipalities the ability to file for bankruptcy under Chapter 9 of the U.S. Bankruptcy Code. Late Wednesday, Mr. Schumer and his colleague Senator Richard Blumenthal introduced legislation that would allow Puerto Rican municipalities and state-owned corporations to restructure their debt under Chapter 9. As if to illustrate the point, Public Finance Corp., a Puerto Rican debt issuing body, failed to transfer funds needed to make an August 1st payment on its bonds this week. The money is supposed to be transferred 15 days ahead of any payment due, but lawmakers failed to appropriate the funds for the payment. Melba Acosta Febo, president of Puerto Rico's Government Development Bank, said, "In accordance with the terms of these bonds, the transfer was not made due to the non-appropriation of funds." A historic deal between Iran and Western powers, heralded as a landmark nuclear deal, may result in sending oil prices sharply lower again, causing further damage to the already weakened economies of countries like Russia and Venezuela, and causing further damage to the U.S.'s own oil industry as a pent-up surplus of Iranian oil suddenly enters the marketplace. The overall stability of the Middle East continues to be an issue as well, as evidenced by an alleged rocket attack on an Egyptian Navy vessel this week, claimed to have been carried out by Egypt's affiliate of the Islamic State. News surrounding the alleged attack is, as yet, unreliable. Economic data released out of China this week once again threw the reliability of the official government statistics into question, as the official growth figures did not seem to match up with the underlying data that the figures are supposed to be based upon. A continued slowing of the Chinese economy, along with the recent stock market rout there, could also add further strain to the increasingly interconnected global economy. South Korean officials this week speculated on upcoming actions by its aggressive neighbor to the north, saying that, with the communist country, North Korea, set to mark the 70th anniversary of the Workers' Party of Korea's formation on October 10th, the North is likely to launch strategically motivated provocations. Intelligence officials in Seoul also say that a new long-range missile launch pad in the western area of North Korea is expected to be completed by around that anniversary as well. To sum up, the world continues to be awash in fear and uncertainty, and stock markets have become overly complacent in their apparent belief that no matter what economic or geopolitical crisis might happen to crop up, any resulting unpleasantness for stocks must be priced in already. Wise investors, recognizing the value of a well-diversified investment portfolio in an increasingly unpredictable world, have continued to follow through on their plans to accumulate additional physical precious metals for their investment portfolios, as temporary price dips have afforded them the buying opportunities to do so. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, July 17, 2015. Brought to you by Precious Metals International.